And now let's unwrap what to watch in the next 2 weeks into January. And avocado and garlic are terms you need to remember. Joining us now, Adam Crisafulli, Vital Knowledge founder and president. Adam, we're not making guacamole here. It's AI?
Yes, AI, is still the most important theme trend in this market. And so garlic and avocado are the two frontier LLM models that are due out around Q1. So for OpenAI, it's garlic, and Meta's avocado. And this is really going to be probably the next major event for the entire industry, which is why they're going to be so crucial.
What about the factor of whether that expected tax-related stimulus, in effect, continues to drive consumer activity?
Yeah, that's also going to be very important to watch. Tax refunds are going to be very large next year, just given that withholding schedules for this year were not adjusted for the one big beautiful bill, and that should provide a tailwind for the consumer. And also we're also going to get some incremental Fed stimulus in Q1, probably one more rate cut, along with ongoing asset purchases of T-bills, which should help keep at least the short end of the yields at the short end of the curve suppressed. So that stimulus will be important also, definitely.
Yeah, how do you weigh that coming out of the Fed versus what we're seeing from some of the other major central banks, including, by the way, Bank of Japan just earlier today?
Yeah, definitely. You're going to see monetary policy globally will be less dovish next year than it was this year. So the Fed is probably going to be cutting fewer times in 2026 than 2025. The ECB is probably finished with their easing cycle. The BOE, the cut this week had some hawkish components to it. And then, like you said, the BOJ is in tightening mode. They'll probably do at least one more hike next year. So monetary policy globally will not be as supportive as it was this year, but there still will be a monetary tailwind for the market and for the economy.
Much nearer term here, Santa Claus rally kicks off in earnest on Christmas Eve. We know typically this time of year tends to be seasonally very strong. Your expectations here in the final trading days of 2025?
Yeah, I think this week ended on a positive note. I really think probably if there's one event this week that drove the markets more than anything, it was Micron, which really helped tech. Tech had a couple of rocky earnings reports with Broadcom and Oracle. The space traded very poorly at the start of this week. That all turned around, largely because of Micron. So it's likely that will continue at least for the next week and a half. It's given that we don't really have a lot of major events on the calendar. We're in a seasonally favorable period of the year. And so I suspect you're probably going to see what we saw Thursday and Friday continue.
Tell me how you think the whole facts versus feelings debate in the economy has evolved over 2025. For a while, we were saying people were feeling really bad, but the numbers look pretty good. Now it seems more to me people are feeling bad, and for the working class, the numbers are starting to look not so great, and we've got this K-shaped economy question. What needs to be resolved in 26 to determine how the market handles it?
Yeah, definitely. I think, that's been a huge trend this year, and it likely will continue. I think some of the affordability challenges in 2026 might ease. Housing is likely to be a major source of disinflationary pressure in 2026. I think employment is really going to be the major wild card. Companies have been relatively sanguine as far as margins and their own outlook, but a big part of their margin outperformance is the fact that they are not adding to headcount. AI is probably contributing a little bit to that at the margin, but I think employment is going to be the real kind of wild card. So I think the narrative will flip in 2026. This year was all about affordability and inflation. I think in 2026, it's going to be very much employment dominating as you see kind of the unemployment rate creep higher. And like you said, within the unemployment rate, more vulnerable parts of the economy are probably going to experience more job stress.